Whenever we hear the word stock market, many people imagine a place where people are shouting, numbers are moving fast, and people are either becoming rich or losing money. Some people think the stock market is gambling, some think it is only for rich people, but the reality is very different. The stock market is simply a place where people buy and sell ownership of businesses. Yes, ownership. When you buy stock of a company, you are not just buying a number on an app. You are buying a small piece of that company. Example, imagine a friend starts a business. The business is growing, but he needs money to expand. Instead of taking a loan, he divides his company into small pieces and sell those pieces to people. Those pieces are called shares. That is the basic idea behind the stock market. Now comes what exactly is the stock market? The stock market is a marketplace where investors buy and sell shares of publicly listed companies. Just like a vegetable market where people buy and sell vegetables, the stock market is where people buy and sell company ownership. But instead of tomatoes and potatoes, we trade companies. Example, suppose there is a company called ABC. The owner wants to raise money. So ABC creates 1 million shares. So if you buy 100 shares, you became a small owner of ABC. Now, if ABC grows, more people want to own it and the share price can increase. But if the company performs badly, the price can fall. Now comes why do companies sell shares? You might wonder why would a company give away ownership? Because businesses need money to grow. Imagine a small restaurant. It is successful, but now the owner wants to open 50 branches across India. He needs a huge amount of money. One option is taking loan, but another option is selling part of the company to investors. This is called raising capital. Real world examples. Big companies raise money to build factories, develop technology, hire employees, expand globally. Now comes what happens when you buy a stock. When you buy a stock, three things can happen. Company grows, the company makes more profit, more people want the stock, price may increase. Example, you buy stock at 100, after so many years it becomes 300. Your investment has grown. Second point, the company gives dividends. Some companies share the profits with shareholders. The payment is called a dividend. Example, you own shares, the company earns profit. They decide to distribute some money to owners. Third point, stock price falls. Not every company succeeds. If the company loses money or people lose confidence, stock price can fall. That is why understanding a company matters. Now comes how does the stock market work exactly? Now let's understand the system. Stock market has three main players. One is companies, they list shares to raise money. Second is investors, people who buy shares because they believe the company will grow. Third is stock exchanges, the place where buying and selling happens. Example in India, Bombay Stock Exchange. Second, National Stock Exchange of India. These exchanges provide the platform. Now comes what is a stock exchange. Many people think the stock exchange is a physical market where people shout and trade. Earlier, this was true, but today most trading happens digitally. You use an app, place an order, and the system matches buyers and sellers. Behind the simple click, there are millions of transactions happening. Now comes why do stock price move? This is the most important question. Why does one stock go up and another go down? The answer is demand and supply. If more people want to buy a stock, then it sell it, price rises. If more people want to sell the buy, price falls. Example, imagine a company launches a revolutionary product. Everyone thinks the company will earn more money. More people buy. Price increases, but if bad news comes, people may sell. Price decreases. Now comes what is stock market versus gambling. What is my basic difference? Many people compare stock market with gambling, but they are different. Gambling depends mostly on luck. Investing depends on such research, patience, and understanding. Example, if you buy a random stock because someone told you, that is close to gambling. But if you study company profits, management, industry, future growth, then you are investing. Now comes how beginners would think about stock market. The biggest mistakes beginners made is thinking, how can I become rich quickly? A better question is, how can I become a better investor? Successful investor focus on learning, long-term thinking, managing risk. The stock market reward patience. A tree does not grow overnight. A good investment also needs time. Now the end part. So now you understand the basic idea of the stock market. It is not a magic machine that prints money. It is a system where people invest in businesses. When businesses grow, investors can benefit. But when businesses struggle, investors can lose money. The first step is not investing. The first step is understanding because knowledge is the real investment. Thank you.